Good morning, traders and investors. Welcome back to Pre-Market Prep. We have another great show for you. We'll get into the wicked rotation in tech to value. We'll talk all about that. The FAA halting multiple airports here, flights not going out, of course, due to the smoke. We'll talk about GameStop firing CEO. Will the Fed raise rates one more time? Signet Jewelers, Fuel Cell, HashiCorp earnings, and DocuSign earnings tonight. And of course, we got Frank Holmes today. We'll talk all about gold. We'll get into some crypto. And of course, we'll talk about some flights action that's going on. Stay tuned. This is where you want to be. Pre-market prep. It's time to rise and shine, team. Let's get it started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Conan.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. Good morning, traders. Let's go ahead. Let's take a look. You can see the S&P 500 or the SPY for me going kind of sideways, now starting to get a little bit of a lift. We'll see if we're able to shake off yesterday. Qs coming down also pretty significantly yesterday. You can see it also on the hourly candles, how just significant it was. It was pretty much straight down about 6 hours there. We'll talk a little bit about that with Triple D coming up here. TLT also falling off and really kind of falling off right now. You can see it going lower here. I wonder what Dennis has to think about that. And of course, we'll take a look. Gold, will this catch a little bit of a bounce? Going to keep watch to see what happens there. Bitcoin, I don't expect to see this moving much, but we'll keep an eye on it. Silver also pretty much kind of hanging on here. Can it catch a little bit of a lift? Something that I will keep an eye on for. And then USO kind of getting a little bit of a bounce. Pretty strong day yesterday in crude stocks overall. And one thing I noticed is that you're clearly seeing what? WTI above 73 today. Talked about how that 72 level would be so important. Would we go above that or below it? Looks like we're above it and holding 73 here. So oil stocks maybe could go higher. I'll definitely keep an eye on that. Let's go ahead. Let's bring on, of course, Dennis Dick here. Let's talk about yesterday. Of course, you guys saw wicked rotation there. Will tech bounce back? Yesterday, we saw just how wicked this market rotation could be as tech dropped and value caught a bid.
Yeah.
What did you see in the rotation, Dennis?
No, that was one of the most wicked days, the opposite direction of what we're used to, where they were just hammering those 7 stocks. Microsoft, I believe, was down $10. You had Apple trading down. You had Meta getting hit hard. Where everything they were hiding in the crowded mega cap trade was coming off hard. And what was going up was all the beaten down value names. My portfolio long-term had a fantastic day. I think it just made like a new 2023 high, my long-term portfolio, which has been down because it's full of value names and it's full of cash. So not a new all-time high for it, but a new 2023 high in my long-term investing portfolio. Talking about the stocks, that I trade. I make a trade once every week or two usually. Just, those value names just picking it up. I mean, big moves, obviously. I've talked about my position in General Motors. That had a really good day. We saw, so many other IWM names. I mean, just talk about this IWM move here, Money Mitch. We were 175 4 trading sessions ago. We're 188 here now. So just quietly at 10, that's 12 points. So you're talking about like a 7% move here up in about 3 or 4 days. In that same time period, just talked about the rotation, the Qs are down. So, I mean, IWM making up some major ground here just the last 4 days.
Yeah, and I mean, you can see the strength in certain ones of these IWMs. I'm going to roll through the top leading RSI names in the IWM, but you guys can just see them here. There's a couple of these that will be smaller, right? I'm just rolling through it just to kind of show you kind of the action. Look at that right-hand side and how everything is kind of just really perking towards the upside. And this is how
Catch-up
important.
trade.
Exactly. Catch-up trade. Exactly. You can see it. Look at these names. Like, I don't know this one, STRL, Sterling Infrastructure, but look at it. It's an engineering and construction stock just taking off. So definitely got to keep our eyes open to see if this IWM trade can keep going. This YEX was moving yesterday. It just seems like a lot of these are catching the lift.
Smaller stocks, and again, very crowded mega cap tech trade. We know those 7 names have been driving the bus for the whole year, but what was driving the bus the last week is the smaller names, and they are playing catch up here a little bit. The question is this just a blip? Is this just one of those like 3-4 day things, and then eventually they just come right back into the mega cap tech stocks and start selling the value names again? It's like this market doesn't want to just move everything together. We had Friday that everything went up, and that was a really good day for the market, and that's why we saw the huge up move. But here you have a fantastic move in all those smaller names, yet the S&Ps are down on the day because they're so heavily weighted, those 7 names. So I mean, tale of two markets continues here. Just the tale, and the story is changing a little bit from what we're used to.
Yeah, one thing that I will look at in the chat's action here, where do I see kind of the top action being on the IWM? And I can see some resistance coming into play with November 15 and kind of the range that's in June 7th, 2022. That's up towards that kind of like 190 level. Of course, I'm just rounding it from 189.50s, somewhere in there. I could expect to maybe get some resistance. And then there's also this upper trend line that we can maybe get to, which is 195. Somewhere between there, I expect at least a little bit of a pullback. But the IWM has been a wicked move. And of course, we saw how yesterday the Qs came right back down. Now the question is, of course, will tech bounce back? That's the harder question, because, of course, these stocks have gone significant move. And we know at some point, we're going to get a little bit of a pullback. But how big of that pullback will it be? And when will the buy the dippers come in?
Yeah, and I wouldn't be surprised sometimes. It was such a wicked move. I wouldn't be surprised if you see a little bit of the reversal after the open. A lot of times you get this wicked move. You get follow through. I call it the 2-day move. You get follow through the next morning because you have people who have day jobs. They come in, they're like, what happened to my Microsoft here? Oh my goodness. So they're like, then they call, or they're going on their line and they're sending their orders to sell it the next morning because they're all spooked that, this is the turning event here. So you often see follow through the next day. What happens about 9:35, 9:40 is those opening orders start to fizzle out, and you actually sometimes see the trade reverse. So it wouldn't surprise me. I think there's underneath demand for all these stocks here. So it wouldn't surprise me if they do start to reverse, right? And obviously it's only been 1 or 2 days here, so it's not even a major pullback here. I'd love to see a bigger pullback to really start positions. I'm not really, looking to jump into a lot of these names here just because they've had such a big move. I was hoping for something a little bit bigger pullback on those names. But, if they were to pull back and say, give back, half of the recent moves over the next, week or two or couple weeks, I would reload some of these names. But, think about it like a Unity. And, look at this stock, from 28. I mean, obviously we missed it, Mitch, and we were beating ourselves up. 39.45. Well, just lost $5. So, I mean, if that got down to 31, 32, would I buy it? Probably. Marvell is another one that I've had my eye on. But again, that was an ugly day for yesterday. Got the big pop on the potential
I tried
Amazon
it yesterday,
contract.
Dennis.
What's that?
I tried Marvell yesterday. I got caught in that little downturn.
And then it just turned. It was a wicked rug pull, like so fast. Like we were open up in the 63 handle, and literally 20 minutes later, we're trading the 60 handle. So there are some wicked moves and some stuff. And then just the opposite direction, what we were talking about, was so many of these names, like a Caterpillar, just catching a bid and rip roaring higher, was up like $8 yesterday. Deere, same story, having a fantastic day.
Cat was a really even better
one. You really got to
one.
respect the rotation. What we try to do here on this show is get ahead of the rotation. What I try to do in my own trading is get ahead of the rotation. The biggest edge that I can have is if I get ahead of the rotation before the masses. Because if you're talking about it, in the pre-market and talking about potential rotation, then you see the tea leaves, maybe a couple stocks turn or something like that to tip you off. There's huge money to be made by being on the right side of these rotations, because this is wicked. I mean, you're talking on Caterpillar versus Microsoft, like a 5% move yesterday between those two stocks, with Caterpillar going up like 3, Microsoft going down, well, 3, almost 3 as well. So, I mean, almost like a 6% move. So, I mean, the money being made on these rotations, if you get on the other side of it, is incredible. And that's what we're trying to do. So what I will say is I think it continues into the open, but I'm cautious on whether, it doesn't reverse here after the open. Not saying, the full thing is reversing, but usually these things move in little waves. We had a pretty big wave yesterday of rotation from tech to value. So I think after the open, just watch. If you start to see like your Microsofts or any of those start to catch a bid, that's your sell signal for a lot of those other IWM because they're moving completely opposite directions right now.
All right, let's go ahead. Let's get to the next conversation. And it seems like the chat's talking about it. So let's go to it. Let's get a look into the airlines. I'm wondering today if the airlines will come down after the FAA halts flights from multiple airports here. FAA halting flights from the Northeast, Ohio, Mid-Atlantic bound for New York. And the FAA stating that we will likely need to take steps to manage the flow of traffic safely into New York City, DC, Philadelphia, and Charlotte. So there you guys have it. What will this kind of actually do for these stocks? I'm not sure today. Do you think that they could get hit off of this news, Dennis?
Sometimes, but it's usually a very short-term thing. I mean, one, we're going to get some rain, it looks like in the forecast, maybe coming next week. Two is these fires aren't going to go forever. So we can think, oh, this is our future. And the global warming people are running with this and saying, yeah, get used to breathing this stuff because this is all we're going to breathe in the future. I don't believe that we're going to just continue to have, smoggy air and smoke-filled air forever here.
I hope not.
It's the season. It was a bad season for wildfires. I haven't seen rain. I think we've had one day of rain where I'm at, and I'm just, about an hour and a half north of Toronto. Yeah. I think we've had one day of rain in the last 3 weeks. So it's been, ridiculously dry. We're under burn warnings, no burning at all, no campfires, nothing like that right now allowed. So they give burn permits, but you're not allowed to burn anything here right now because it's so dry. So it's just the season. It's going to pass. This too shall pass. So these are short-term things. If the airlines pull back on this, it's probably a buying opportunity. I don't know how the air is at yours. Like the air here is a little bit smoggy. I'm under a smoke advisory here. Not too bad here. Nothing like what we saw in New York. Oh my goodness, those pictures from yesterday. And obviously Christian Fromhertz, who we're good friends with, looking out his windows and saying the orange sky and are we on Mars? I mean, it was pretty crazy.
New York is
I haven't
pretty
seen
bad.
anything like that here.
Yeah, New York is pretty bad. I've seen multiple videos from New York that I'm just like, man, I don't recommend when, like being out there in that. I don't know how.
No, it's not good to breathe that in.
It's not good, right?
No,
I mean,
for sure.
There's one thing like maybe being outside for a little bit, but there's a whole nother thing if we like kind of have to work outside right now.
Yeah.
I mean, we were seeing also mentions from different companies telling them that they go back to remote working kind of style. And will that kind of catch up, right? I mean, we'll see what happens with these airlines. Will they take a hit? Will we see kind of this really kind of go into the airlines? We'll find out.
I don't think it's going to be major. So I don't think this is going to be like, oh, we're knocking the airlines down. And if they knocked them down, I think yesterday would have been the day because, yesterday with those, we're looking at that. I think any pullback on the airlines is probably a buying opportunity.
Yeah, my biggest thing is at least yesterday, I didn't see flights being halted, but maybe they were. Maybe I missed it. Let's go to GameStop firing CEO. Let's take a look at GameStop as they definitely disaster stock of the day. GameStop firing CEO Matthew Furlong as appointing Ryan Cohen as executive chairman. The company didn't provide a reason for the termination. GameStop also canceled conference call here. Then about 24 minutes after the report came out, he goes and posts this tweet, not for long. I don't know what necessarily this was for, but
because the guy's name was Furlong.
That's
going out. Hilarious. He's the pun master. I mean, this is what this guy does. He sits back and he's just a game. Everything is a game to him, a big game. And, some of it is, just whatever. I mean, I don't know what the guy's thinking half the time. Is he going to change, and turn GameStop around here? I think Michael Pachter talked about this on CNBC yesterday. I'm not going to repeat everything he said because I'll get some hate mail for it. I don't want the hate mail. But let's just say Michael Pachter does not believe that Ryan Cohen is going to be able to turn around GameStop. I don't think so either. I think anyways, I just leave it at that, because if you say too much stuff bad about GameStop, I get too much hate mail. So I'm just going to leave it at that. But, it's a pullback. Did they come in and buy this dip? They seem to like buying the dips on GameStop. You got $20 as a major level, so maybe temporarily this thing could bounce.
Don't worry, Dennis. I'm not as shy as you are. I'll say
You're going to say his stuff? I'm not saying nothing.
I won't say the pack their comments. I'll say my own, right? Come on. It's Money Mitch here. I don't shy away from it. GameStop is a dying brand. There's nothing here underneath the hood. Yeah. Let's just be honest. He would have to change this business around so much for us to think of GameStop as a great story, a great investment story. Just take a look at the chart. The chart's going to tell you it all. It's been waiting to try to get some kind of pop, but it can't do it. Every pop getting what? It pops, comes back down, pops, comes back down, pops, comes back down. This is the classic story that it is fading off. The brand is fading off. And even me yesterday, I didn't mind playing GME for maybe the day trade, but that's it. That's it. I would only maybe rent this short-term trade. Other than that, do I even want to swing trade GME? No. Because the tape bombs could always come in here. And let's just be honest. What do we see about gaming? We see gaming moving to the cloud. Why do you need GameStop in the future?
Well, we've argued that for a long time. And I mean, obviously the stock did what it did. It's kind of its own thing. So, I mean, this stock, it just does its own thing. So it's a tough stock to just grab the fundamentals and say, yeah, this is what it's worth. Because when you do that story, you come out with a Michael Pachter $6 price target. So is he going to end up being right? I think eventually, but still, you've just got to be, careful just, selling stuff, anything, on trading GameStop on fundamentals just hasn't worked for a very long time.
Yep. And then let's go ahead. Let's get to the next conversation. We'll see what happens there with GameStop. If Ryan Cohen can come to save it, we'll find out. All right, let's go to the overall market talk. I did want to talk a little bit about some Fed conversation. Of course, next week we will get the FOMC meeting. And right now, what happened, right? Well, after the Reserve Bank of Australia surprised earlier this week, it was the Bank of Canada that turned to stun the markets with a 25 basis point hike. And that's adjusting the CME Fed tool here this morning. Probability of the Fed hiking was at 25 basis points next week was at 36% when it was just at 22% a day earlier. So definitely important to kind of catch that. We're slowly but surely working closer and closer towards potentially a 25 basis points next week.
Yeah. And, Canada here obviously has, this real estate bubble that they're trying to pop to a certain extent here. We know the way they've worked around it in Canada. The banks just find a way. They raise the interest rates and all they do is extend the amortization out. So, I mean, it's like almost like it's just not working to slow the consumer down. It's not working to slow the real estate bubble down here. Yes, housing prices come down a little bit in Canada, but they're still crazy because they just extend out the amortization. So, I mean, if you got 25 years and you go to 35 years and your interest rates went up, but your payment's going to stay the same because now you're just paying it off over 35 years. So, I mean, just kicking the can down the road is what it is. We'll just say that. It is what it is. But I just think this is just not, doing, what, is intended here because the banks are finding ways to get around it.
And then my only concern would be is, does the Fed just smash the market expectation here? It seems like the market has been just rising. I feel like everyone's thought that it was almost a given that this would be the pause meeting. And I think that it's not so much of a given anymore. Will they do the 25 basis points? I mean, there's still room for them to do it, right? We saw what happened in PCE, that it started getting a little bit of a lift. CPI report coming next week. Will that intend them to go for the 25 basis points? What are you betting on, Dennis?
I think so. I think the market is allowing it. So I think the stock market has allowed them to continue to raise rates here because, again, the market just doesn't seem to care. So they're going to buy stocks and buy everything up. They're going to continue to raise rates because, one, now you have the wealth effect coming back into play to try to drive prices higher. And we see what's happened at the pumps. The prices have went back up. So, I mean, there is some inflation happening here. I I just think it's going to be hard. You're not going to get back down to that 2% anytime soon. So the Fed's probably looking at saying, well, if the market's going to give us, this much opportunity to raise rates because they're buying the hell out of stocks, and don't forget, they say they're data dependent, but they look at the market too. I think, why aren't they going to take that, shot? So they're probably going to go a quarter again. Maybe they even stay on a little bit on the hawkish side. So I think there is, some bad news coming here for this market too. So I think you've got to be somewhat cautious with chasing stocks here. I love the move in the IWM. I love the move in my long-term portfolio, but we know in the last 2 years, every time your long-term portfolio starts to feel like, oh, here we go, it's starting to look good here again, it's been a selling opportunity. Like, give it perspective. Ford just went from 12 to 13.50 in 3 days, 4 days. GM just went from, I have a trading position in Ford, and I have a long-term position in GM. It's been big moves. These are pretty good moves, 10, 12, 15% moves on some of these stocks in 3 or 4 or 5 days. Mitch, to your point, this has been a trading environment. And when you're getting these 8, 9, 10% moves, it's usually an opportunity more to ring the register.
Definitely. And that's one thing that I was fighting with yesterday, right? Of course, you guys know I've been swinging ARKK, and this has been kind of getting the lift. But do I just run to the profits now? That's the hard part, right? And so, of course, just recently I closed my Norwegian for an over 20% gain. And I think I'm starting to get to that point where, yeah, I've seen gains that I normally have not gotten this year. So I'm starting to lean more towards that profit taking.
Yeah.
Because the truth is, I haven't seen too many 20, 10% winners this year.
Yeah.
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 And I think that you get to a certain point where, yeah, the market could keep going, but we're not just about trying to get the full picture, right? We just got to get the meat of the move. And if we could get that, it's probably going to push us forward, right? And the market could always turn around. I feel like we've been riding this AI bubble, but just take a look at like AI yesterday, also coming back down, right? I saw Microsoft pretty weak yesterday, right? Is the AI trade slowly but surely starting to turn around? Google coming back down, right? I feel like even the bigger names are telling us something here, and we're seeing it even in Apple. Apple came out with new products, and it's just been kind of more of a sell the news
They
event
were
since
overbought.
then.
We covered this right off the hop, and they were just overbought. I mean, all these names were overbought. Is the story over for AI? Absolutely not.
Nah. Yeah.
Does the story cool off a little bit to give you a chance to get back into some of these names? I think so. That's why I'm not chasing. So right now, my long-term portfolio, I have Amazon that I bought around 106, I think. I have AMD. These are, my AI plays. I have AMD. And that's pretty much the bulk of it, I think, because I've sold my Microsoft, which was way too early. I sold my Google way too early. I sold my Apple. You know that I sold the Apple last year. So am I looking to get back into some of these names? Yeah, but again, they're 30 times earnings. I mean, I'm not, I'm still Warren Buffett approach. It's got to be a reasonable valuation. If Google pulled back, let's say to like the 110 area, would I be a buyer? Yes, I would. So, but that's another 12 points down from here. So I'm hoping for more of a pullback here, but I also know that the story is far from over, and these buyers could reemerge even today. Like, I mean, this was the nicest dip we've had for a bit. So I think it's wishful thinking to just say, yeah, this is over. They're going to be coming back down, and we're going to get all these things back at where they were 2 months ago. I don't think it's going to be that easy for the Bulls.
Let's go over to some of our earnings reports today. Let's go to Signet Jewelers and see if what happened here. So let me go ahead and put that up. There we go. Q1 adjusted EPS at $1.78 beat the $1.49 estimate. Sales of $1.67 billion beat the $1.65 billion estimate. They cut full year 24 total sale outlook from $7.67 billion and $7.8 billion now to $7.1 billion and $7.3 billion on the high end. The consensus was $7.73 billion. So definitely falling on a lower guidance move here as it comes down. And I mean, are really people buying jewelry right now?
Apparently not. SIG, big pop into the earnings report. Obviously, retail got some love the last couple of days, and here's the dose of reality here.
Yeah,
and this is the problem, is that a lot of these beaten down retail names, which are getting the relief pop because they were just so massively oversold, are still having serious fundamental problems. The Signet Jewelers is not a great report. We're talking about, still a cheap stock. So there's still Macy's type involved here, because when you look, they're cutting their fiscal year 2024 outlook. They were supposed to make $11.11. They're now looking at $9.49 to $10. Well, if you take the lower end of that at 9, this thing is still trading with a PE of like 6 or 7. But with that being said, nobody likes to see, their growth slowing. Nobody likes to see less money being made. I think the dose of reality here is the consumer will indeed slow on some of these purchases in the back half of 2023 and early 2024, as higher interest rates do eventually start to slow the consumer spending. So dose of reality here. Does the Signet dip get bought? Probably. The reason for that is now people are saying, I need value stocks, things still trading, 6-7 times earnings, even on that lower end. A little bit of the Macy's, look to it all. So 61.35 is a big level for it. It's being defended at the 52-week low. Let's see if that level can hold.
I think you gave even the technicals there. My man Dennis killing it there. Of course, keep your eyes on Signet Jewelers. We'll see if it goes lower today, and we'll see if it affects different stocks. I have seen, let's say, like a Fossil just been leaking and leaking and leaking. This thing's up right now. Don't know why it's up right now. I'll be kind of watching for luxury goods to kind of get hit. But what's the other one? Movado. What's the ticker for Movado? I forgot it. I'll take a look at that one. I think it's MOV. There it is, MOV. So that's the other kind of luxury good, and that's also up right now. We'll see if these kind of reverse, of course, with Signet kind of taking that hit. Let's go to Fuel Cell Energy, as they also reported earnings. They're missing on EPS here. Fuel Cell Energy, FCEL. Their EPS coming in here at a loss of 9 cents, missing the loss of 7 cent estimate. Sales of 38.3 million, beat the 25.45 million estimate. And as you guys can see, they got a little bit of a pop at first, but now starting to drop off here at around the 228s.
Fighting in the chat here again, so I missed what you said. I got to stop with the haters here.
Oh, come on, man. You guys in the chat.
FCEL.
On days like today, Dennis, and I'll be honest, I look at the chat.
I call everything wrong, buddy.
Certain times.
I call everything wrong. I don't make any money. I'm an idiot.
You know how it is, my friend. They always want to come at it, man. And,
what drives me nuts is this Pablo guy. I'm going to call you out here, Pablo. Keeps saying how, I said Tesla was a $25 stock. I have no idea when I said that. I wish you could find the YouTube clip.
I'll buy the stock for $1.
I don't mind being called out when I'm actually wrong, but when I'm right and then they just, take something out of context and try to spin it to try to make me look like I'm wrong. Because remember who was saying Tesla in December that eventually the January effect would turn this stock? I tweeted it half a dozen times that in all likelihood Tesla was going to turn. I said, if Tesla, I think this is what I said. I said, if Tesla is continuing to fall, it's trading 27 times earnings. I'm like, there's some people who think, and I wasn't me that thought Tesla was going to $25. Mm-hmm. I said, if it ever went down to that kind of a price, I would back up the truck and buy it like crazy. But now he says, Tesla, you said was going to 25. I said, if it ever went down to a price like that, I would be a buyer like crazy. I was saying at 100, the valuation was starting to get reasonable. That's what I was saying. When it was $100 and trading 27 times earnings, that it was starting to get reasonable. I didn't buy it. I didn't jump in, but I actually was talking about it reasonable. So, he's in there just to try to tick you off and take stuff out of context every single day. He's in there just to tick you off. So I try to ignore it, but he keeps bringing up the one stock that I call, and I didn't even call it wrong. Find better examples, because I'll tell you, Pablo, you can find a hell of a lot better examples than that one, because I call stuff wrong every single day. I'm a trader. It's my job to try to give market opinions, which is what I do. And I try to, be right 55% of the time. So go cherry pick the other 45. I'm going to say something wrong today. I'm going to be wrong today. I can guarantee you. Go find it, Pablo. Find a different example. I'm sick of hearing this Tesla one.
Yeah, and I think that one of the things is, I talked about it yesterday, just keep it simple. The truth is that we're not trying to be 100%. If that's what you think we're trying to do, well, then I guess you're in the wrong business. There's no such thing as perfection.
No, but when I call something
opinions,
wrong,
right?
Find one that I actually called wrong, because I didn't even call Tesla wrong there.
Yeah, that's
so
the hard part.
Call me out on something I did wrong. Pablo,
All right.
your job today is to find something on the show that I say wrong, and I guarantee you, we're going to talk 15 stocks. There's going to be a couple stocks that I actually say wrong. So I guarantee you, go find that and call me out on those ones. But stop calling me out on this Tesla call because I didn't even call it wrong.
All right, guys, getting ready for this number. If you need to go wide, Dennis, go ahead. We'll see what happens here. Initial jobless claims coming through. Continuous jobless claims expected is 235, and on continuous is 1.8 million. Let's see what we get here. I'm going to take a look as we start getting it. Initial jobless claims right here, right at the top there, 261,000 versus 235,000 estimate, and continuous jobless claims coming at 1.757 versus 1.8 estimate there. So lower on the continuous jobless claims, but initial jobless claims getting a little bit of a spike above the estimate. We'll see how that kind of moves the markets. Let me take a look to see if we're getting a move. It seems like we got a small, I'm not even going to call that a pop. Like it went up like what, 20 cents there on that number. We'll see how the markets react, but I don't see too much reaction right now. It's just kind of in line here. We'll see if we take out and go towards like 427.20s or below like 426. That would tell me it's moving off of this. But right now, I feel like we're holding in this hourly range, and we could still have hourly recoveries. That's why I'm kind of keeping a watch on this hourly chart here to see what happens with this. Do we hold sideways here and just pop back towards kind of the 428s? 429s. We'll see what happens.
It's a really, we're at the crossroads here with this market here right now. Like you could feel the value rally coming a little bit. You could see, you know, when the value started to go up, it was predictable the mega cap techs would sell off. And remember, I'm a relationship guy. This is how I make my money. It's identifying those relationships and trying to extract alpha from the inefficiencies of people not following those relationships. This initial jobless claims 261 versus 230. We're moving off of it. None of this is going to be a huge market mover. It's next week's CPI that's going to matter. So this market's probably more in a holding period until we can figure out, you know, what the next month's CPI is going to look like. But we're moving here right now. So I mean,
now we're getting the move. They were late.
Moving.
Did the algos
a little bit of
algos late this time? They usually front run the move,
late.
Right?
It was delayed movement.
Yeah.
So we get a nice little pop here. Again, just respect the rotation. So if you start to see Microsoft, Apple's, Google's, Amazon's, which we just saw pop on this, be cautious with those other names. So that's just the tale of two markets. I don't think you're going to see this market where they buy everything or sell everything here. We're separating here again. It's value versus growth. It's the Knights versus the Florida Panthers, the value versus the growth here. So there's only going to be one winner, one loser here, I think, today. So I don't think it's going to be one of those markets that they just come in and everybody wins.
Yeah, we'll have to wait and see, but definitely starting to get that reaction. The SPY getting up there all the way towards 427.22. Talked about if we could get above that kind of 426.90s, get into the 427s, maybe we can start lifting out of this hourly sideways period. If you could see also on the 15, I could draw kind of a little bit of a rectangle here to kind of draw out the range right now. Seems like we're between kind of 427.30s on the low end, 426.30. So about like a point. You can see yesterday towards the close, there was a couple of wicks below this, like attempts to go lower, and it didn't break that. So I'm going to keep this kind of rectangle in my mentality today, right? If it goes above that 427.30, what would I be looking at? Probably looking at some tech names maybe getting a little bit higher. Below the SPY going down there towards 426.30s, maybe we see more rotation to value, right? Always having two types of situational awareness thinking, I think it's very important, and having both sides, right? A lot of traders only look to one side, the long side, and don't understand how the stocks will look if we do break to the downside. Let's get out of this conversation. Of course, we just got the jobs numbers to come in. A little bit of a spike there. Now holding above 427 will be something I'll be looking for. Let's get to the next earnings stock. This is one that I don't really pay attention to often, but I did see it down big here. HCP, this is HashiCorp, and they reported their earnings today. Let's get to this. As they reported a loss on the EPS here of 7 cents, beating the loss of 14-cent estimate. Sales of 137.98 million, beating the 133.11 million estimate. They did lower their guidance there. I think that definitely affected the stock. And as you guys can see, down over 20% after earnings.
$26. this is the level for HCP. I don't see. Is that where it bounced? Where did it get to after hours, Mitch? I can't.
The low of the
My-
day, the low of the move was
through
24.54.
Okay, so
and then
$26 is your bogey here now.
Mhm.
So if you're buying the dip, and I'm not buying the dip because I don't even follow this company, but if you were, that's the level, 25.83, the low of the move in April. That's the level that they need to defend. We're still in this buy the dip mentality. So, I don't argue if you're looking at some of these earnings reports and thinking, oh, should I come in Signet and be a buyer? Should I come in HCP and be a buyer? There is levels of support here. If those levels of support get taken out, that you know where your stop out is. You can put on any trade, again, as long as you know where your out is.
Agree with that. And I think that a lot of traders, sometimes they like to judge trades, and really it's all about the plan, right? And I mean, as long as you have a planned attack, can anyone really tell you're doing something wrong? No, that's what trading's about. At the end of the day, I know that a lot of people don't compare trading and gambling, but I do, because at the end of the day, the truth is every trade is a gamble. We only can do what? Go after it with a processed approach, have risk preservation in mind, know our system. But the truth is, it's always a gamble. We don't know it's going to end up into the green. That's the truth. All right, let's get out of HashiCorp.
Sure.
I do want to let us know that we did get a call out from Frank Holmes, so won't be able to talk so much on the airlines, gold, and crypto. But I did one better for us, right? I said, you know what? Forget all that action. We're not going to talk about the airlines, but I know someone that keeps up with all the stock market. We've now referred to him as PreMarket Prep's probably top guest. Let's bring him back on, my man, Christian Fromhertz. All right, what's going on?
How's the air?
It's thanks for asking. It's getting better. I mean, it's a work in progress. I do see the sun is out, and
it's
you're on
trying
Mars,
to pierce
right?
through all that smoke.
yeah. What are you guys doing up there, Dennis? What's
I
going
don't know.
on?
We just got too many campfires going, apparently.
Canada
But
guys
the funny
just-
thing is that I'm like maybe 200 to 300 miles away from these forest fires, but we have not had anything like that. You're like 500 miles away, but I guess it was just the way the wind is blowing. We had a little bit of smoke warning yesterday. We had a little bit today, the warning, but it's just kind of cloudy. It smells a little bit outside, but nothing like those pictures that you were posting there from New York yesterday. That looked like the apocalypse, like you had a nuclear bomb go off. Like, sorry, I'll apologize for all Canadians. We're sorry.
I think this is the worst thing that Canada has ever done.
I think so.
The worst thing that Canada
I
has
think
ever
so.
done. Guys.
We're usually nice up here in Canada, with our hockey games and
Right?
our,
Don't start
beer
forest
drinking
fires,
habits.
guys.
We're always nice, and we apologize for everything. So I'll apologize for this too.
Listen, you have to joke around a little bit, but of all the things that we've been through over the last few years, like this is pretty minimal, and
A weird one though.
Definitely weird, and not used to seeing the world look like Mars for a couple days.
I was thinking like Elon Musk finally getting his wish here. He says he wants to die on Mars. Well, he just had to go to New York City and he'd be good to go.
Exactly.
That's what he's always said. I want to die on Mars. It did. It looked like Mars. Crazy.
Well, I know we could talk about the Martians out there, but let's talk a little bit about the stock action. Of course, we saw a wicked rotation kind of yesterday as we started seeing tech kind of fade a little bit away. What are you seeing, Christian?
Yeah, and I was listening to your broadcast earlier. So Dennis, congratulations. It sounds like your long-term account you've positioned nicely for this, and
well, it helps the last few days, but it hasn't been good. So don't congratulate me on my long-term account. I wish it was all Apple and Microsoft and just the other names.
Dennis is like, I'm a trader, man. That long-term.
I was way too early. So long-term account not doing nearly as well as my trading account.
Yeah. Well, still, I mean, I heard year-to-date highs, so congratulations.
Yeah, that helps.
Definitely.
Yeah, thank you.
Yeah, I mean, as far as like what we're seeing so far, I mean, I think it's going to be really interesting to see, the Qs and the mega cap growth and so forth. They got pretty overbought. If you use the RSI indicator, it was hanging around a 75, 76 for a few days, and we know that things could always get more overbought, but in terms of risk reward, there wasn't great reward for that type of risk. And so finally you're seeing that rotation. And I think there's a lot of questions. Is it just a couple days of rotation, or are we going to see more follow through? And I think that you have to get comfortable. Like for me, what I try to do is get comfortable with those sectors that could see the rotation. Over the weekend, a couple of the sectors that I was looking at were the industrials, which I just thought that they were starting to, we were starting to see signs, along with the story in China that they were stimulating, that you could see this move back into the industrials. And I think the industrials, if I look at names that are now breaking out to 52-week highs, I see a lot of industrials. So I think that's a real interesting group. The home builders have been on fire. I mean, that's been the story all year long. And the poor home builders don't get any recognition
No.
or credit, but they've been just methodically, you know, uh, pulling back a little bit, going back out to new highs, pulling back a little bit, going back out to new highs, and they've just been on fire. And I'm watching things this morning like Lowe's looks pretty good, Home Depot looks pretty good. So these are things that I'm comfortable with, because I find it very difficult to go into some of the really underperforming areas, because I am a trend trader, so I like to stick to things in
Yeah.
trends. So, but everybody has their own style, and there's multiple ways to make money, and that's what I always tell traders, that I've got my style that I use. But that doesn't mean that I'm going to hit every trade with my style. Like the energy stocks were really nice, and they might catch a little bit of follow through. And I was kind of debating whether or not I should add a little bit to add a energy stock here or there. And I didn't do it yesterday, because you have, at the end of the day, you have to have conviction in these ideas. And because sometimes you don't get the timing right. And if you do get that pullback, are you going to, if it's not a continuation from yesterday, are you going to be, have the conviction to stay into that group if it's down a little bit? For me, I know that I wouldn't. And therefore, it's better for me just to kind of stay away a little bit, or find one that I really like within the group that I can kind of buy on dips and feel comfortable with. But for me, like, that's what it comes down to, is I have to have conviction in some of these rotations, because you may not get that follow through right away.
Christian, talk about your strategy with trend following, and how do you know when the trend has broken? I mean, is it just a matter of going to your chart and drawing your line and then just waiting, or and you're just holding to those trends? Just talk about that strategy overall, because as you go to different time frames, it looks like, oh, well, the trend isn't broken here, but it is broken here. What time frame do you use when you're with your core trend following strategy, and how do you execute when you're seeing these turns?
Feel free to also, Christian, if you'd like, you could share your charts. I know that
Sure.
you have a
Sure,
lot of
yeah.
that on your charts to kind of explain through, but by all means.
Let's see. Present. Share screen.
I just want to see Christian's charts.
Yeah, we do.
Let's do window here. Let me see if I can do this. How's that? Did that work?
Got you up.
Yeah,
There
so
you go.
Of course,
We're
I'm
ready,
watching
baby.
this squeeze in Carvana, but
Woohoo!
which
Someone say
I don't.
Carvana?
Yeah, so I do start, like, bigger picture. I don't do much real trading off of the weekly chart, but I always start there just to see what's going on, if the trend is intact. But we just mentioned home builders, so I think, like, this is a good place to start. But I've got a lot of indicators and lines on my charts. Try to just, for now, just kind of keep it simple, and I'll just mention the 50-day moving average. I think that's, for an uptrend, something that's been behaving in an uptrend for a while. You want to keep an eye on that 50-day moving average. And I just mentioned, I mean, this was just literally about a week ago, where the home builders, it was a great point to say this is an area to watch, a pullback to the 50-day moving average. And I think for a trend trader, like, that's one of the major moving averages to watch. And you got the perfect, I mean, magic, just by magic there, it bounces and gets a nice, big green bar there, and then the continuation back out to highs. Now it's a little bit extended. So would I chase the home builders here? No, I would wait. I would be taking profits and then wait for your next check back. Maybe not to the 50-day moving average, but even to the 20-day moving average, because it's a little bit extended. But
There's a better question, maybe. So when you're trend following, and I want to ask you this, how do you know when to take your profits? Because I mean, maybe it's easy to tell trend's breaking, so this is where I'm going to stop out of the trade. Do you have just targets when you go into it, or is it like, at a certain point when it just gets so far away from the trend that's just overextended that I need to take some money off the table here now? How do you know when to exit the trade?
Yeah, so that's a great question, of course, and it's a little bit more complicated because we never know how long a trend is going to last, right? Everybody tries to make their predictions and so forth, but really, in the game of trading, no one knows what's going to happen on a day-to-day basis, and no one knows how long a trend is going to last. So, one of to make it simple, one of the best things to do is to always plan out your trade before you get into the trade. So think about where you want to take profits. And I do use indicators when when it hasn't broken out to new highs. I can look at previous supply levels and so forth. But yeah, it's basically when things get a little bit extended. It requires I normally take 1 or 2 targets pretty quickly in this market, and I've been trying to adjust my trading this year because a lot has changed this year, and I was really quick with taking those first 2 targets because last year, if you didn't do that, sometimes your profits you would kind of watch your profits become, you would lose those, and the trade would kind of reverse on you. Now I'm trying to be a little bit more liberal with taking those first 2 targets and at least letting that last piece run. But yeah, when something gets pretty extended away from like the 5-day moving average, I begin to kind of take off most of the trade and leave a runner on. And then I think the best thing to do at that point, and this is an important point, is to put a trailing stop on and realize that you're probably not going to time the top perfectly. But if you could leave that last runner on, and this way you could really profit if the stock or group does something really incredible.
I love that. And I love to mention there also about using a trailing stop, especially after you've already taken some profits, right? At that point,
Exactly.
it's just kind of more let the market work for me. If it turns around, it's okay. I already have the order set to get me out of the trade. I like that approach there, Christian. And I like how you're mentioning different indicators and using them kind of more of a support system versus as this is where I get in, this is where I get out. Like, exactly, right? I think that's very important, and looking for also extended moves, right? Whenever you're trend trading, that's what you're looking for it to come back towards a support and really kind of take off back towards the top of the trend, and then trying to take the profits into the move. Especially this market has been that market that if you don't take your money and run, a lot of the times the profits just come back. And there's nothing worse than having a winner become a loser, right?
Yeah, and I think the last point too is that if you don't let that last piece of the trade run, it's so difficult because when we get a trade to work, right, what we want to do is we want to manage it. We want to say, geez, I got it to work, let me take profits. And one of the worst feelings as a trader too is when you're out of the trade and you're pleased the one day is to see it continue to kind of work and to be right in a trade, but just to take it off a little bit too quickly. Again, last year that was the name of the game, is to say, okay, you got what you were looking for, take your profits, be happy with it. But this year, right, and in previous, I hate to say things are in a bull market or bear market, but watching what the prices are doing this year is obviously much different than last year. Now you don't want to force yourself out of out of at least the last portion of the trade, until you get a sell signal.
Love it. Now let's go ahead. We'll wrap it up with just conversations on the overall market. Of course, you're going to be looking to see if we catch a little bit of a bounce there. I do like to mention there on XLI and kind of the industrials overall. Is there any names there that you like more than others? I know that I started seeing kind of Honeywell prop up a little bit. GE has just remained strong. Cat had a big move yesterday. Deere. Is there any space in industrials that you're looking a little bit more, Christian?
Hey, I like that Honeywell chart. I mean, that's not bad. That's, if it breaks out, just a little bit further here, you've got a nice move, and I like this pretty decently. Caterpillar, I think, can continue to run, but maybe if you get an inside move, that's something that I'm watching. I'm also watching just the Dow, even though it's been. I mean, of course, like this is not what we're seeing right now. It's the small caps. The Dow stocks are large caps, but um, the risk reward here is setting up if it can kind of push out here. I think that the Dow stocks could be very interesting. And I was looking at this trade right at the end of the day yesterday, and I'm like, give it one more day. But if you look at this group, you've got a JP Morgan in there, right? You've got an Exxon.
Yeah.
So if we continue to see a little bit more value areas, value type stocks, this could be a group to go with. So that's what I'm looking at for today. And then of course you can kind of catch a little bit of things, like Apple has had, after that reversal on the the sell the news event, now maybe this can kind of settle in, and of course Apple's in the Dow, right? So always when I'm looking at an ETF or an index, the Dow is easy because it's only 30 names. Go through those 30 names and see if you like those 30 names. If they're setting up and if you think they're good setups, right, then the odds are that the index is going to move up as well.
All right, like always, you guys can check out Christian Fromhertz, check him out, Tribeca Trade Group, and maybe AI added soon enough. But we'll definitely keep an eye on it and stay safe out there in Mars / New York. Definitely, I know it's tough out there to deal with it. Did you still bike in, Christian?
I didn't this morning. I did on the way in yesterday, but I left my bike here at work. I was told by family members, please don't bike.
Yeah,
so,
that's what I was going to tell you the same thing too, Christian. Save those lungs, man. You need them, man.
Right.
Yeah, when you drive in, make sure you don't put the recirc on so you're breathing your car and not grab that air from outside.
Yeah. The
all
car
the tips
filters,
to not breathe the outdoor air.
I wonder how bad those car filters are getting. You might need to replace them a little bit quicker than you usually do. Have a good one, Christian. Definitely check him out. Tribeca Trade Group. I'll make sure to throw up his Twitter in the chat. A great follow there. Have a good one, Christian.
You too, guys. Take care.
All right. Thanks for Christian jumping in. And he's always ready to go, man. We had Frank lined up, but you see how quickly Christian comes on and kills it every time. All right, let's get to this market. I want to take a look at our top movers today. Let's go to TradeZero and see what we see on the gappers. All right, team out there, and we'll definitely throw it to the chat. You guys also throw up tickers that you guys are seeing making moves up. If you want to talk about them, this is your opportunity. What are you seeing on here maybe standing out to you? Of course, you see Carvana. What happened there, Dennis? I didn't even catch it.
I didn't catch the headline here either, but this is in full short squeeze mode. We've talked about this stock, and, this is just unbelievable turnaround here, at least. And again, it's hard to be short these names because there is a huge short interest and there is these potential for pops, and any type of a headline that comes out that gives, any type of hope that this company is going to survive, it goes up 20% on these because it's been priced like it's going out of business. I mean, you're down, from 300 to 30 bucks. Now it's, it was some guidance that they came out here, I believe, just a few minutes ago here when Christian was on. I'm just trying to grab it myself too, but it sounds like the Q2 guidance was pretty good. I don't know if you have it, Money Mitch.
It's right there. So it looks like we got a report there. And of course, TradeZero has some Benzinga that reports
nice.
here. So
the TradeZero runs the Benzinga.
Yeah. And then so I just used the news right here from the platform, hit the news right there. Carvana expects to achieve adjusted EBITDA above 50 million, total gross profit per unit above 6,000 in Q2. And this is really what we wanted to be kind of looking at, right? Carvana was trying to do this whole reset of focusing on trying to get towards, some profitability, right? And I think that they've found a way to do what? Survive through the tough time And now they're trying to start coming back. And I think this is a company that I thought would go to zero, and they quickly are being able to
Nothing
turn
goes
things
straight to
around.
zero. Even when
Exactly.
stocks go bankrupt, a lot of times they don't go to zero. So, even like, Bed Bath & Beyond, which is selling stores, where's that thing? It's still 22 cents.
Yeah.
So, I mean, it's hard to send stocks straight to zero. And when, you're talking about stocks down 96, 97% from the highs, sometimes going for those last few dollars can be very dangerous from the short side. People think, oh, naturally you're short. You want to be short the weakest companies and the worst stocks. That's not really what shorting is about. It's about being short. It's about timing. Short selling, and I short stocks every day. I buy stocks every day. I trade market neutral. But short selling is all about timing. So don't just necessarily think, oh, this company is going out of business, so I'm going to short this stock and I'm going to make 100% of my money, because it doesn't work, and it's not that simple, and stocks don't go straight to zero.
That's the hard part there. And I think that one of the things is being flexible, right? I made that call, but I was easily able to see that the price action was telling me something else. And we've seen how these stories have turned around. Upstart, Carvana, names like that, Affirm getting some lift yesterday, things like this. I think we got to keep an eye out for. And that's how shorts get squeezed too. So you got to be careful too. And another kind of profit-taking example on the downside versus the upside, right? How do you determine when to take profits on the downside is something to keep in mind.
Timing.
All right.
When you're short selling stocks, it's all about timing.
Yeah.
Like long-term investing, while you're buying good companies at reasonable valuations. You could say the opposite. If you're short selling stocks, you're shorting companies at absurd valuations, but that is dangerous. You'd be short Nvidia 200 points ago if that was the case. So, I mean, it's just not about, doing, I go to that saying that I heard from somebody on Twitter, just, a good short seller doesn't shoot them in the face, they shoot them in the back. So when they start going down and they start to break and the story starts to go cold, that's when you're shorting, not when the story is hot.
Mm-hmm. And I think that, that's one thing that you need to be thinking about too, right? When the story does get kind of just dry, a lot of times you see sideways consolidation. That's hard to stay around. Now, one thing I'm clearly seeing is we're starting to see a change of the top here. And what are we seeing? We're seeing now Adobe at the top. We're seeing Lilly now starting to show up here. I saw Nvidia jump for just a second there. So keep your eyes. We'll see if some of these tech stocks can catch a little bit of a bounce. Of course, we did get that jobs number just as of late. They're getting a little bit of a bounce, nothing big. Amazon was a big down move yesterday. Do you think that this one could catch a little bit of some buy the dippers? And what levels are you looking at?
Getting a price target bump, I believe, or, an initiation. I saw it. I had it written down. I can't see it there now. I believe a buy rating from Wells Fargo. Crazy that they didn't cover. Maybe they had an analyst turn or something there. So it's getting the lift here. Again, what you saw yesterday was a little double top put in place, 127. If you look at the dailies, 127.40, 127.36, reversing off of that along with all the stocks that they've been hiding in. So you get a little relief pop here, makes me more inclined to sell it. Talking against my book, I'm long Amazon, the long-term portfolio. I still think there's a story here, which is going to carry the stock forward for the next couple of years. So sticking within the long-term portfolio. But if you had it on for a trade, I'd maybe be lightening up into the bounce.
All right, so there's two headlines I see here. I see one on that rating. I threw it up at the bottom there. It looks like that one's an initiate coverage with an overweight rating, announcing a price target of 159. But I also see a headline here of Amazon considering launching ad-supported Prime Video tier. That is a big news, I think, there. Google and Microsoft facing backlash for ad inclusion in AI trials, Airbus records. So Amazon to launch an advertising-supported Prime Video streaming service tier. That's actual news there. So I would keep watch on that. That's exactly what Disney Plus did, right? And
you wonder why
Netflix
they're not selling Netflix off on that.
Yeah, Netflix was popping actually on this.
Yeah, Netflix is ignoring it. You would think that they'd actually maybe, sell Netflix on that headline. And, the other day when I was thinking too with when Affirm did the deal with Amazon, or was it Amazon? Who did Affirm do the deal with?
Affirm did with Amazon. Correct.
Yeah.
Yesterday.
So what was popping into my mind, I was like, it can't be good for Visa and MasterCard. I actually got shorts on Visa and MasterCard after the open. Yes, I believe it was yesterday. The firm had the big pop.
Yeah.
And I got short Visa and MasterCard, and they were both really good trades. Visa basically opened up near the highs. And if you look at the chart from yesterday, again, understanding relationships.
Yeah, look at
I was
that.
able to get short Visa, and I was able to get
Nice.
short MasterCard. Again, I get out too early, you know me, but they were both really good trades. I wish the MasterCard went down $12 after the open.
Hell
So
yeah.
I'm like,
Those
it's just
look
like
like
people
awesome
were
trades.
sleepy on that. I
Yeah.
mean, I think that, was like, you got a firm coming in, like it's, a competition for them on Amazon. A lot of people paying with their MasterCard and Visa card. Now they can play with the firm too. So it's competition. So I'm not surprised at that move. I'm just surprised it took the market that long to figure it out.
We'll see what happens in different stocks. One stock I've been seeing kind of just continuing to lift. We'll see if Roku can continue to lift, even though yesterday
That
a
was
lot of
great
stocks
move
pulled
yesterday
back.
for
Look
Roku.
at that. Still staying
Yeah, good
strong.
call, Mitch,
so-
because you were bullish on Roku there.
Yeah,
Obviously, big
you know
boss.
why though, right, Dennis? I'm looking at also biggest positions in ARK and seeing if they can get going.
Yeah.
Because those are the ones that, I mean, they're loaded in, right? I mean, look
Yeah.
at Zoom. Zoom's on my watch too. I'm not getting in this yet, but I feel like at some point, the sleepiness of Zoom could maybe turn around and start pushing, right? These are big positions in ARKK, Roku. One that I know that I saw turn around on Kathy that I'm going to focus on to see if it can kind of come back is Path. That took a big beating yesterday.
Where's that thing?
It's been climbing. She's been adding all the way. And it gets to 1994 and takes a big hit back.
Big
down.
reversal. 16 would be huge, like bounce off that level. I don't know if you're going to get that far down. I think, even the fall off in Palantir yesterday, huge reversal
Exactly.
here.
Yeah.
Probably was the short-term top. I mean, hindsight capital, would tell you that. But I think also we just got to be somewhat cautious.
Yeah, you got to be nimble.
You look at yesterday's low 1452. Does that hold? I still think you're buying pullbacks on all these names, but I kind of like, the hook I was talking about, where they have the big reversal, then they leak and they try to bottom a little bit, give me a little bit of life, and then start showing me like, okay, you're starting to show some stability, and then show me that little hook, the little turn there. That's where I like to strike, not just like on the first day of the pullback, because you don't know how big the pullback can get. Let's find some stabilization. And if it just bounces right back, so be it. We missed that move. You can miss trades all the time. You don't lose money missing trades. You lose money by striking too early and then getting run over.
Yeah, 100%. And I think that one thing that we all got to keep in mind is that these stocks have been running for like weeks now.
Yeah.
There could always be wicked turnarounds. And I think that as a trader, you always have to keep that in mind. The truth is, if the trend is your friend until it isn't. And that's the truth, right? That you hear that statement all the time. It seems like that's what we're seeing here. Last thing I'll mention, I saw a mention in the chat about Lucid, that it's oversold. Yes, it is oversold, but this story is broken right now. There's something needs to change in this story.
Broken.
Yeah, let's just be honest. Dennis and I have been
My
calling this
$5
since the
price
very
target.
beginning.
So as much as people can call me out for some bad stuff,
This is one of our best ones,
eventually
Dennis.
Lucid's going to be $5. And I said this back when it was like
22, I think.
40, 30, 20. It was like 35 and going down. I remember people saying, oh, we're going to buy the dip on Lucid. And I said, I think long-term, the stock is going to be under $5. Has never got there yet. It got to 6. Then I had the ridiculous pop up to 17. We're back here at 6. I think eventually it's going to be 5 and 4 and 3 and 2 and 1. So is there a bounce here eventually? Because we're in this kind of buy the dip mentality market. Maybe. There's always money to be made, playing bounces. But I'm not putting Lucid in the long-term portfolio anytime.
No. And the thing is, remember, they make their vehicles. How much have they been struggling on making their vehicles? What's the number one thing you hear Elon Musk saying about electric vehicles? Is that we're so good at it and everybody else sucks.
Well, that's kind of true.
It's the truth. Look at it. Look around. Everybody struggles. Everyone has recalls. Ford's had recalls. GM. And Tesla's had its recalls, but they just do it that much better right now. We'll see if that ever does.
They might always do it better. I mean, love him or hate him, the stuff he's accomplished, like I've said, I'm a huge Elon Musk fan. I haven't been long Tesla. I trade Tesla all the time, but I haven't had it as a core position in the long-term portfolio because of valuation. And I just couldn't wrap my head around it, so I just didn't do it. But, he's done, his margins are better. He's done everything better. I mean, I love Elon Musk. And I think,
Can't blame me for it.
I think there's, opportunities, but, on pullbacks, would it be a buyer Tesla? Maybe, but I've never been able to wrap my head around that valuation. That's just not my style.
All right, let's go ahead. We're going to start wrapping it up here. Like always, you guys can check out TradeZero for an extensive inventory of shorts. Time to get towards the market. Of course, it's 9:04. What are you seeing, Dennis? Of course, one thing I always like to do
in the IWM here this morning. I'm seeing a reversal and again, we talked about it, and I was predicting that it would happen at 9:45. It happened at 8:30. So it came early, where all those tech stocks that were down this morning and they were buying the banks and they were buying up, some of the oil stocks and the value names this morning, that has reversed here already. Now, does it go back? Is this just cycles? But you can see clearly the banks have become weak here. They were way up this morning. The KRE was trading way higher this morning, and now, they're seeing some of those beaten down tech names actually turn around and start to go up here. So you're seeing the trend, the value to growth trade come off here, or growth to value trade come off here in the last hour. Now, again, we don't know if this continues or how it's going to go, but as of this point right now, it appears that growth is already finding buy the dippers coming in.
And we'll keep an eye on it. Of course, we've seen some wicked moves today, and then we got wicked moves yesterday. Will tech bounce back today? Of course, GME firing CEO. That was definitely one of the headlines today to catch, and we'll see. Will the Fed raise rates one more time? Something definitely to keep watch. That comes next week. That's going to do it for us today. Like always, you guys can keep up with all the action right here on Benzinga. Dennis Dick, Triple D Trader on Twitter. Give him a follow. Always good to have you on, Dennis.
See you guys
next time. Appreciate it. All right, let's go ahead. We're going to get you over to live trading. That's coming up next. Let's see what I can get into, see if I can maybe find some of these growth trades. Maybe we'll see what happens in tech today. Will we continue to pull back, or will we just lift higher again? Find out on live trading. That's coming up next. And like always, smash the like, guys. We're going to keep going with the book club, continuing to push forward on that. Going to go ahead and try to do another Sunday here one last time before I adjust towards the weekdays. But smash the like, guys. Join it up. And definitely, we love you, Dennis. I know there's haters out there. And what I would say is, like always, guys, take everything we say with a little bit of grain of salt. What do I mean by that? The truth is that this is not investment advice. This is for informational purposes only. This is for you guys out there to learn from the process approach from masters like Dennis Dick and Joel Elconin. Of course, you guys get a little bit of money, Mitch, but I'm still learning every single day, just like you guys should be learning every single day out there. So keep pushing yourself, because this is the place to be at. Benzinga, if you want to go ahead and learn about the markets, pre-market prep, we'll be here for you guys. Smash the like button now to get you guys over to live trading, and let's keep it going. Benzinga.